Hey, Tyler. Chime's latest funding round makes it one of the most valuable private companies in what's been a pretty hot sector this year, fintech. After raising just under $500 million last week, the company is now valued at $14.5 billion. That's double what it was worth on paper in December. And in just 18 months, Chime's valuation soared 900%. Big investors in this latest round include Coatue, General Atlantic, and Dragoneer. That puts Chime's price tag above popular trading app Robinhood, which just this week announced another cash injection that values it at $11.7 billion. Stripe, meanwhile, still tops the list at $36 billion. These private fintech companies are weathering the pandemic pretty well as people rely more on digital banking. But the traditional sector, it's going in the other direction. Take a look. The KBW Banking Index is down about 30% this year. Chime and other so-called challenger banks aren't actually banks, though. They're actually software platforms. They handle the front end. For example, things like user experience and customer acquisition. And the deposits, meanwhile, those are held elsewhere with their FDIC-insured partner banks. Kelly, Tyler, back to you.
Kate, stay right there. We want to bring in Chris Britt. He is the CEO of Chime. Chris, it's great to have you here. And what do you think accounts for your ability to kind of jump right to the head of the pack at a time when fintech valuations and the competitive landscape has, never been more popular?
Thanks. Look, we don't measure success by the size of the round or, the valuation levels. We're really looking at helping a huge segment of Americans that have a lot of anxiety around their finances right now. There's a huge, huge portion of America that are still just trying to make things work. I mean, we've seen as much as almost 10% of Chime members that we've seen receive unemployment benefits. So, there's a lot of challenges people have in America, and I think the investors just saw a huge opportunity to deliver financial services in a new way, deliver it through a consumer technology company that partners with banks. I appreciate the intro, you guys clarifying that we're not a bank, because we don't position ourselves or say that we're a bank, but we offer banking service with our partners. But look, we're thrilled with this new injection of financing from some of the foremost growth investors in the world, like Tiger Global and Iconic, and of course, our close partners at Coatue.
Let me ask Chris what you plan on doing with the funds, because if I recall that you had some technological issues a couple of months ago, outage, but I also know that technology is a big reason why you're able to offer some differentiating products and services, like the ability to get your paycheck, before you can typically get it from your traditional bank. So tell me about kind of the need to invest there and what else you're going to do with the funds.
Well, I don't think our plans changed too dramatically. We were already very well capitalized, and so this financing was somewhat opportunistic. But we're going to continue to focus on launching new products that help this mainstream middle-income consumer that we serve. We have a service that allows you to get your paycheck a few days early. We have a service called SpotMe that lets you take the account negative without charging you a $35 overdraft fee, like most banks in America do. And then most recently in June, we announced the launch of our Credit Builder credit card product. And that's had amazing results. I mean, the average consumer that uses this product, according to a study by TransUnion, has increased their credit score on average by 30 points. So I think that trifecta of products has really served us well. And we intend to very aggressively invest in the people and the team to build out additional products to serve this segment. And then also just stay aggressive on the acquisition side and invest in technology to make sure that we are, really running a tight ship here.